10 years ago, they said software is eating the world. Now we say payments are eating the world.
As the world becomes more connected, interoperability and data transfer between platforms, two forces at the heart of payments and money movement, will drive the future.
And the impact will be huge. So huge, in fact, that only one word could fully capture what we're seeing. Power Plus.
Which stands for platforms, online, wallets, embedded, real-time, plus value-added services.
So how are wallets shaping the future of payments? Traditionally, wallets stored physical money, but that definition is expanding. And as it does, wallets are becoming more essential.
Research shows that by 2025, US wallets could represent a $4.6 trillion market. And that in addition to money, they'll store tickets, receipts, identity credentials, and maybe even health records, making wallets more like a super app.
This is because we're not just transforming how we store and use money. We're also disrupting the concept of money. In today's economy, money takes multiple forms, including traditional fiat currency like cash, but also cryptocurrencies, stablecoins, tokens, and much more. Look at cryptocurrency. With blockchain, we're transforming the concept of value being stored primarily in a bank account. It's revolutionary, and people are taking note.
As of February 2021, there were 68 million blockchain wallet users globally, and that's expected to increase the more businesses and financial institutions accept cryptocurrencies. Another example is stablecoin.
Stablecoins are cryptocurrencies that are pegged to other assets like fiat money or tangible commodities like steel or gold. It took 5 years for stablecoins to reach a global supply of 6 billion, but only 4 months in 2020 for that supply to double. And now, interesting use cases are emerging everywhere.
In 2019, Facebook launched Libra, now DM, to facilitate cross-border payments. And in the same year, we at jpmorgan became the first global bank to design a network to facilitate instantaneous payments using blockchain technology.
JPM Coin is a shared ledger system that serves as a payment rail and deposit account ledger. This is a powerful tool because it enables our clients to transfer US dollars held on deposit with JPMorgan, facilitating real-time value movement and solving traditional hurdles of cross-border payments.
On top of all these innovations, central banks are also watching the exponential growth of digital currencies and launching their own digital currencies to maintain sovereignty. Take China. Over a millennium after inventing paper money, China was the first country to launch its own central bank digital currency. And reports suggest another 81 countries may be following suit, up from 35 a year ago.
Still, even with all the excitement around cryptocurrencies, there are still barriers to wider acceptance, like high price volatility, issues around speed, scalability, merchant acceptance, and the security of blockchain networks.
And we believe that to support the further adoption of digital currencies, we must innovate in these areas.
Together, these are just some of the ways that these core themes are transforming the future of payments.
It's all part of our larger Power Plus framework and our belief that payments will be everywhere, morphing from the last step at checkout into an invisible, seamless, and enjoyable experience.
Until they eat the world.